So we know that fast and flexible working capital is a key to starting and growing small businesses. And with successful businesses like each of yours, it's proven out, right, that the older mainstream brick and mortar bank way of doing things is not as flexible to entrepreneurs, and maybe not as nimble. So why don't we have each of you introduce yourselves, maybe share a little bit about your background, and also tell us about your firm and some of what is unique in the fintech space about how you support small businesses. So I know that's a lot. So Denada, why don't you start us out?
Hi everyone. Great to be here with you, and thanks Nicole for the introduction. Denada Ramnishta, I'm the Senior Vice President for Lender and Partner Strategy at Lendio, which is the largest small business marketplace that facilitates business financing for SMBs and brings borrowers together with the appropriate source of capital. So as I noted, the sort of what Lendio hones in on and what we pride ourselves is in the ability to provide options to the SMBs based on their need, based on their profile, risk profile. And we do it in a way that we leverage technology heavily, but also introduce the smart human touch to the process, because as we've learned being in the space for a long time, is that those SMBs really do need the guidance to really figure out their appropriate options. In terms of background, I've been in the space for quite a few years, and prior to joining Lendio 3.5 years ago, I led strategic partnerships for American Express non-card lending. So that's a little bit about me and a little bit about Lendio.
Terrific. Audrey, how about you? You go next.
Sure. Hi. Good morning. I'm on the West Coast, so it's morning. My name is Audrey Kim. I'm on the product team over at Square, working on our capital product. Square is primarily a payments processing business for small businesses across the country and around the world. And our goal is to build an ecosystem of primarily financial services that help sellers start, run, and grow their business. The product that I work on, which is called Square Capital, helps facilitate working capital, especially to underserved businesses that would primarily get turned down by a bank. What we do is we take the real-time payments data based on their sales. We assess which businesses are healthy and growing, and we offer them capital that can get repaid flexibly through their card sales. That product started, I think, in 2016 and has, over the course of its lifetime, done about $6 billion cumulatively, about $2 billion annual run rate at this point. And then we also recently participated in the PPP program, which I'm happy to talk about later.
Terrific. All right, Ombeline, you're next.
Thanks, Nicole. My name's Ombeline. I lead lender partnerships at Fundera. Fundera is a marketplace for small business financing solutions. We offer everything from SBA loans to lines of credits to non-loan solutions for small businesses, including credit cards, payroll software, legal services, and anything really that a small business could need in their lifetime. By offering business owners a single marketplace to shop for these solutions, they're able to compare options, discuss different solutions with our loan specialist team, and essentially decide what's best for their business. And then on the other side of our marketplace, we have dozens of lenders and other financial services providers that leverage Fundera as a unique acquisition tool for their own businesses. And by pairing those lenders and financial services providers with our small business customers, both are able to really unlock value and grow their respective businesses. And I have been at Fundera for 2 years, all kind of in the business development team, leading everything from referral partnerships to bank partnerships to alternative lending partnerships.
Terrific. All right, thanks. So, Denada, Lendio is, as I mentioned, all three of you are disrupting the traditional space, but Lendio in particular, touts really being able to speed up the approval process and funding. I think, traditional offerings maybe 2 to 3 months, of a process for a loan, maybe 90 days for funding, where with Lendio, there's, fast turnaround time on approval, 2 to 10 hours, and then, you may have funding in less than 7 days. So just thinking about COVID-19 and what we're all kind of seeing, and where a lot of traditional types of banks and lenders may have to get digital, right, to stay alternative, or to be an alternative and to stay alive. With you already being ahead of the curve, I'm just wondering kind of what Lendio has in mind to stay even further ahead of the curve.
Yeah. That's a great point, right? So we're seeing this evolution now in lending being digitized, and the ability from various lenders to leverage data and technology in order to underwrite. Now, COVID has really thrown a wrench into, frankly, everything, and the ability for lenders to manage risk and assess risk, right? So in terms of specifically for Lendio, being ahead of the curve and on the cutting edge of having leveraged technology in the way that we integrate with our lenders on the platform, which we, prior to COVID, had about 75 of them, and also in the way by which we facilitate that customer experience, which is dynamic via a dynamic application that tailors to what that business needs. We see the opportunity and the need for the financial institutions to digitize, frankly, as an option for us to be able to provide those services and partner with those financial institutions in order to help the entire ecosystem really progress towards having a better customer experience, but also a better lender experience. So we view that as an opportunity for us to work with financial institutions. And it is that kind of mindset within Lendio and that agile thinking that, as Audrey made the reference, and we all get tics when PPP is mentioned, right? Like the prime example of sort of that agility from Lendio was when PPP came about. And we were able to pivot our business in 72 hours, quite literally, to be able to collaborate with the financial institutions that had the need to provide loans to a larger number of customers. And we did that, and we were able to partner with over 300 financial institutions to provide that digitalized ability to collect information specific to the PPP loans. And right, so again, the idea isn't so much to say not just stay ahead of the curve. Of course, we're doing that and trying to stay in touch with the market, but also how do we collaborate to collectively use the need as an opportunity, right? So again, going back to the PPP, we were able to support those financial institutions, and we're able to fund 100,000 customers through the PPP program, through those financial institutions, by being agile and again, pivoting the business model fast enough to what the market needs. And we'll continue to do that.
You know, it's at Ocrolus, we experienced the PPP as well, for anyone who may not know the Paycheck Protection Program. You know, what a tremendous thing to go through, and one, to be in support of businesses and help them, but also just to experience, like, oh, we're doing this today, now we're doing this, oh, we're switching to that. Like, it was tumultuous, and we all kind of lived through it. You know, I know, Ombeline, your firm already, I know that you participated in PPP. We talked about it beforehand. And I think I had read you'd already funded, I think this was before COVID, like $2 billion in funds for small businesses. And that was even before COVID. And I just think it would be interesting for all three of us to chat a little bit, you know, and Ombeline, we'll start with you, about what you experienced in PPP, what you did differently, or what surprised you, because I bet we all have some interesting experiences.
Yes, absolutely. Yes, many stars. For Fundera, even weeks before PPP came to fruition, as businesses across the country began closing their doors, we shifted our focus to really serving as a consultative resource for small businesses on how to navigate these incredibly turbulent and difficult times. So we did this mainly through our content on our blog and live webinars that we were organizing multiple times a week for small businesses. In any given month, even pre-COVID, we see about 1 million small businesses coming to Fundera to read our content and engage with our marketplace. And unsurprisingly, in the early days of COVID, we saw that number quickly increasing. And to us, that really meant that we had a responsibility as a company and to our readers to serve as a source of truth and of guidance through what was going to be and is still a very confusing time for small businesses. So throughout March and April, we published more than a dozen articles a week on COVID-related topics, ranging from tips on managing cash flow to negotiating new payment terms with lenders if you can't pay back your existing debt, different types of available grants and SBA funding, and eventually, once PPP came about, how to apply for a PPP loan based on your entity type, what documentations do you need, and now the loan forgiveness process, which is something many small businesses are now facing. Denada mentioned this, like most other companies who participated in PPP, we pivoted our entire business in just a couple of days, got our application running in a few days and started accepting applications and submitting them to our lender partners. And given how quickly funds were expected funds were expected to last, we encourage all customers to actually fill out applications with multiple lenders, both on and off Fundera, to maximize their chances of funding. So because of the way PPP is structured, it was impossible for a business to get duplicate funds with different companies. So there was really zero risk in a small business applying to multiple places, and it would only maximize their chances of actually accessing the funds. So our end goal was really to ensure as many customers as possible got access to these funds, whether it was through Fundera or through another source of funding. And in terms of day-to-day operations, I think Audrey and Denada touched on this as well, just with the scars that we were left with post-PPP, but our entire team shifted their focus. Every single person from our CEO down was on the phone every day with customers, a lot of times just hearing them out and being kind of an ear to listen, but also making sure that we were able to package their applications, get the documents that the banks need to get them the funds. And though it was really exhausting, I think most that participated in PPP probably come out of it with a positive experience. I think it reminded us of why Fundera and why our respective companies exist, and really brought our teams together in a time where we were miles apart across the country and the world due to COVID. So overall, I think it was a positive experience.
Yeah, and Ombeline, that's exactly right. There's never been, at least that I can recall, a more sort of mission-driven kind of work, right? And as much as we laugh about the scars of PPP, at the end of the day, again, every single company, obviously us here, but many others, they took this on as a mission-driven. But Audrey has probably a different perspective than the Lendio and Fundera, which are facilitators, as a direct lender, right?
Right.
What's your perspective specifically?
I would say super similar in terms of the themes. I think honestly, it was very scarring, but it was also the best project I ever worked on in my life. I think I'm going to write a blog post about this later, but basically, I'm sure this was true of Fundera and Lendio as well, and probably Ocrolus. But typically when you have like a technology project, you have to like herd all the cats, right? You have to like write the deck that's like, here's why we're doing this and why it really matters to the business and all this stuff. And with PPP, you didn't have to do that because it was so self-evident, like the purpose and the meaning of the work, which meant, and at the same time, nobody had anything to do. So like everyone just was free all the time. And so we ran, our team is about 150 people. And we ran as hard as we could for 24 hours a day for 8 weeks straight. Importantly, I think like Square was not an SBA lender at the beginning of this. And so we had to build an SBA program overnight. And I think, we actually didn't even have our application out by the time round one ended. And so we thought that maybe we would miss out on the thing, but we kept building anyways. And then round two came up. And we ended up becoming, I think, a top 10 SBA lender overnight, basically. And that was super gratifying. I think what made it particularly gratifying for us is that our customer base is very different than the people who got round one loans. So I think my numbers are right, the round one, I think the average PPP loan was 600K. In round two, the last time I checked, it was about 240K. Our average loan size is 10K. And so I think our customer base just really represents people who basically had no shot with their normal bank, which I totally appreciate as someone who had to like figure out all the stuff of like how to do this. There's scarce resources. You got to allocate them kind of rationally. Our head of ops kept referring to them as lifeboats. Like she was like the captain of the Titanic or something. But the big banks ultimately made their choices in terms of who they were going to serve and who they were going to allocate their scarce, manual application review hours to. And I can't fault them. It's not infinite, their resources. But it really did leave a bunch of customers kind of vulnerable. And I'm super happy that we had the opportunity to serve them.
Yep. At Ocrolus, we ended up very quickly, of course, realizing that there were a lot of forms, new sort of needs that we were gonna need to address. So we were able to pivot and nimbly move and address those and provide the digitization back to lenders and folks like all of you on this call. But it also revealed some interesting things that we thought we kind of had it all figured out, and we were like, oh, there's some gaps here. But what was great about the gaps is it exposed opportunity, and that opportunity has actually allowed us to pivot to talking to newer clients that we have not spoken to before. Who are interested in us because we were able to do new things. And I think it's also positioning us, right, to be a little bit different, even in maybe how we market ourselves. I'm just curious, for all of you, was there anything in particular that, when the dust settled, you thought, wow, this is opportunity now. This is something we could be doing differently, right? That could maybe change the game.
I think, the first two thoughts that come to mind are, one, I think in general with financial services products and fintech products in particular, speed is usually the killer feature. Money is kind of money, right? It's literally a commodity, whether I have $1 from you or $1 from this guy. But the speed with which you can get that dollar typically is what many products that are new to market and successful bring to the table. And I think that was only reinforced with PPP. I think the fact that people were waiting for a really long time to get their applications reviewed made a really big difference. So I would say that is it's like a principle that I think anyone that wants to build new products should keep in mind. And the second thing that's super interesting is, and I think both Ombeline and Denada kind of referred to this, there was an incredible amount of collaboration that happened around PPP. The analogy that our team uses to refer to the PPP experience is it felt like a video game where every level you had to kill a different monster to survive and get to the next level. Whether it was the SBA dropped new guidance yet again, and it's totally different than the last time, or whatever other set of challenges that rise. But basically it felt like not only are we in this together, it felt like all the other lenders in the program were in it together because all the rules were changing at the same time for all of us. And we actually just got off a call with one of the really big banks who is both a direct lender and an investor, they buy our loans. And on the phone was all the people who are trying to figure out forgiveness. And we were like, this doesn't make sense. Line item 3A is totally different from line item 9A or whatever. And there was a level of collaboration there that I've never really seen before. And so I think, I don't know that points to an opportunity of a specific product build. But what PPP did is it showed that it's possible. I don't know if the circumstances under which that collaboration existed will ever recur again. In some ways, I hope it doesn't, because it required a global pandemic and the threat of the Great Depression. But it showed that it can happen. And so I'm kind of curious as to whether that happens again. Because I do think a lot of great product ideas rest or die really as a result of the inability for different firms to collaborate.
Yeah, I absolutely agree. I think going back to I think what Denada mentioned about kind of fintechs digitizing the customer experience, if fintechs continue to move at this pace to develop new products to meet the needs of businesses that are kind of coming out of the other side of this pandemic, big banks are going to have a really hard time competing with the speed and the agility that these fintechs are showing. And I have no doubt that a learning for most fintechs that participated in PPP is just how quickly they could operate with the right level of focus and the right level of pressure that maybe at some points was a little bit too high. But nonetheless, I think there are some really clear takeaways for how to quickly build products and adapt to changing needs very quickly.
Yeah, and the only thing that I would add to what was just said is again the emphasis around fintechs having the ability to be agile, right? So like Square wasn't an SBA lender, but there's an agility that exists there in being able to pivot and streamline the process and serve a lot more customers in terms of numbers, right? A lot more SMBs. With a process that was completely new to them. So that idea of agility, or the Funderas and the Lendios alike, pivoting the business model almost overnight to serve the underserved population, right? So again, this idea and the emphasis that we've learned is agility is key as we move forward in our space. That was reinforced and emphasized through this PPP process.
And actually, sorry, just one more thought, which is in terms of thinking about new products to build. I do think the other thing that PPP showed is that regulatory doesn't have to be a drawback. Like, I think when people are like, oh, financial services versus, whatever else you could build as a company, like compliance is terrible. And it is usually. But I actually thought, at least the way that Square's GR team was talking to both the Treasury Department and the SBA on a multiple times a day basis, they really listened in terms of like, they would issue guidance and be like, this is going to kill all of the small guys, please change it. And then they did, not because we said it, but because it was the right thing to do. And I thought that had a really interesting, again, example of like, you can do it. like so it is true that you can listen and be flexible. And again, I don't know if the circumstances will ever come up again where that happens, but I thought it was actually a really positive part of PPP.
Are you saying that the government was actually agile? Is that what you're saying?
Yeah, that is what I'm saying. It's shocking. I can't believe I'm saying it either.
I know, but I do agree. I actually do agree. There was ultimately this program has been successful despite all of the hurdles, right, from every single angle. But I do agree. And if it wasn't for that response back from the SBA, frankly, a lot more hurdles would have happened, and we wouldn't be where we are today, right?
I can't believe they built an API. It was amazing.
One of the things I was just thinking about, there was, and I don't know if it's because we were all so engrossed in it, but it did seem like PPP awareness, even if you weren't a lender or you weren't necessarily applying for a loan, it was sweeping the nation, right? We were all talking about it. Everything was in the news. And as a result, I think one of the positives is that consumers have probably become even more aware of fintechs if they were before, and digital offerings, the news, just constantly talking about it. So I'm curious, just from a consumer perspective, Audrey, and where Square sits in particular as being pretty innovative in payment processing and so on and so forth. I think that the lines are getting blurred between fintech and banks and such. And I'm just curious, how you sort of view Square and in the end, maybe how the consumer views Square and in the eyes of the beholder.
Ooh, good question. So I would say there are fundamentally kind of two customer bases that Square serves. There are owners of small businesses who we call sellers. And that's the coffee shop or the small retail boutique that you walk into and you see the white stand. That's our seller ecosystem. And then we also actually have a consumer product, which we call Cash App, which is number one in the kind of finance app store category, and serves a ton of consumers across the country. It competes with Venmo. I would say in both cases, what we're not trying to literally do is replace the bank. What we're trying to do is make money not stressful. And I think for a lot of people, a bank is a somewhat soulless service that they pay for. It's just like where you put your money, and like, or the place that like keeps your money for an like inexplicably long time before you can access it. And so I would say in both cases we're trying to do that. Square did receive an ILC charter from the FDIC earlier this year. And so our plan is to deploy that in a way that helps money be less stressful for both customers. I do think this was, again, referring to the like, banks had to choose which customers mattered to them in PPP. And I think that again, I don't, if I were them, I'd probably do the same thing, but it forced the choice in a way that's usually not so explicit. And so I think customers are probably more open than before to potentially changing providers.
Interesting. You know, as we think about small businesses and all of us who serve them, right, in various ways, you're starting to see some opening up, right, as we start to kind of emerge from this bizarre environment we've been in. But things have changed, right? How we educate our kids, how we entertain ourselves. A lot has changed. A lot of new business opportunities have emerged as we've been working from home or have had to just completely change our lifestyles. And then, you know, in this time of you know, unrest with what we're dealing with, and understanding that there is diversity in our businesses, and there needs to be diversity, you know, in our product offerings and what we're doing there. I'm just curious from each of you, you know, do you think that are there things that your firm might be doing a little bit differently, or initiatives that you might have that kind of speak to new products or new changes that you might be making? And then, you know, if there are any just comments you might have around maybe initiatives that have to do with some of the recent things going on in, you know, in our lives.
Yeah, well, I'll go. So I'm going to address sort of the question separately, specifically to the environment and how Lendio is adapting to what's to come, right? How does this post-COVID lending look like? For us, I mean, from the borrower perspective, a marketplace model, what we've gone through has proven itself and its value in that as there is market volatility and changes and dynamics in underwriting models across lenders, right? This ability to be a marketplace in the middle to guide customers exactly where they fit in their options for various products, you know, it has come to light even further through this, the COVID process. As it relates to the lenders on our platform, which we view them as partners, frankly, right? It is a call for us and a commitment for us to continue the collaboration, to adapt. So that way we help the lenders, right, in their ability to assess risk and find the right customer for a sustainable business, because it's in everyone's interest to do so, right? So at Lendio, we are pivoting and honing in around the ability to create dashboards, information, and collaborate with companies like yours to be able to provide information that gets them more efficient in the way that they underwrite in this post-COVID world, right? And as it relates to sort of what is happening today in the world and our participation, we are very, very committed to serving underserved businesses. And by virtue of that, we are serving underserved communities holistically, right? So our mission is to fuel the American dream at that underserved community level. And then also this deliberate effort to really make sure that that every single unrepresented or underrepresented group has an opportunity to be able to access capital, right? So they can fulfill their American dream is really important to us. And again, I want to sort of bring to light what we did with PPP, to where we understood what Audrey and Ombeline noted, right? We understood that the banks were likely not going to serve the underserved once again, right, through this PPP process. And for us, not only did we hone in on the true small business, but we collaborated with lenders that did focus in those underserved. Like as examples, we work with 5 CDFIs that work and invest in minority-owned businesses, in women-owned businesses, in Black and Latino-owned businesses, right? We collaborated with them and honed in on making sure that those communities had an opportunity for access to capital. And that's an effort that will continue. It has been prevalent, but will continue at Lendio. And then the other thing that I wanted to mention, because it is near and dear to my heart, what Lendio launched early this year is education and empowerment webinars across the country to be able to educate underserved businesses in the way that they leverage capital to grow their business. Again, this is an educational effort that we launched. Unfortunately, we were only able to hold 2 sessions before COVID hit. But again, it is our commitment to continue that endeavor to educate business owners on how to leverage capital to grow their businesses.
Yeah, I 100% agree with all that. I think Square is doing a series of things alongside Twitter. We happen to share a CEO that I think is widely available on social media. But I think in terms of the actual work, I read an op-ed the other day from a young Black man who wrote, a lot of people are texting me and saying, like, what can I do? I, care about you a lot. And he was like, I don't need your words. I need you to donate. And I thought that was a powerful statement. And I think the way that, at least at Square Capital, we are internalizing that is, just like Denada said, access to capital is an incredibly charged and I think historically unfair system. Unfair in like so many ways. But to the extent that technology can help equalize access to capital, I fundamentally believe that is so powerful in terms of making an unfair system more fair. And I would point to like our average loan size was 10K versus 240K. Like our population is disproportionately minority and female, actually, in terms of the owners of the small businesses that for Square sellers. So I'm really proud of that fact. And I think it'll only be kind of more true in the future. Because ultimately the reason why businesses are underserved is not necessarily because banks are uninterested, but because they represent higher risk. And to the extent that technology can use data to show that that good credit risk is actually not high risk, the finer a point you can put on risk, the better off everyone is going to be. And so I really am very bullish on fintech's ability to help with that. And then the last thing is what's really unique about PPP is that there was no credit risk involved, right? And so that's why everyone like jumped in so fast and was like, here, everybody have loans. That will not be true in any program where the government is not guaranteeing it. But I do hope that lenders and those who work with the lenders use this as an opportunity to look for data that helps, right? So the more you can get an accurate model that is not based on proxies that are historically correlated with underserved characteristics, the better. And so this, to me, to answer your earlier question, Nicole, I think actually that's probably the single most important social thing that can come from all this, which is it gives you data to show people who would otherwise be locked out, but are actually quite good. Don't ignore the data.
Agreed. We only have a couple more minutes. I can't believe it. It goes by so fast. Ombeline, did you want to add anything else? I don't want to cut you off.
No worries. No, I mean, I think that Denada and Audrey really hit the nail on the head. Fundera's big focus has also been around partnerships with CDFIs, as well as also understanding more about our customer base. I think in the past, we haven't invested enough in understanding our customer base and how we can better serve minority business owners. And in the wake of everything happening today, we're really investing in learning who our customers are and developing new partnerships with more CDFIs across the country and other organizations that can help us better serve those customers and carve out specific programs that give them access to capital, given that all the data points to the fact that minority-owned businesses are being served even worse than non-minority-owned businesses by large banks. So would agree with everything that was said before, and I think it's important for all of our companies to be really invested in these programs.
Yeah, I would just say that it's so it's just heartwarming, I guess is the right term, to not only hear it from all of you and your firms, but also, you know, I spend a lot of my time talking to a lot of other lenders and other firms, and the sentiment seems to be the same across the board, where those of us supporting small businesses have an even more heightened awareness of what's going on, and also are thinking about the client experience, how things are impacting them. You know, even with the work from home, right? We all were working from home and still are. We haven't missed a beat. We work just as hard during PPP. We're working hard now, and it's a wonderful thing to see how terrific being in a fintech is. You know, I came from a traditional background and I loved it. It was a great experience, but once I pivoted into the fintech world, there's no going back.
Saw the light, Nicole, huh? You saw the light.
Saw the light.
Lucky for us.
So listen, I want to thank deBanked again for reaching out to NYC Fintech Women. It was such a pleasure to meet everyone and to get engaged. And to the panelists, I can't thank you enough for giving the time and letting me, you know, be neurotic and overplan probably, but it's been so much fun working with you and chatting with you. Anyone interested in becoming a member of our org, please reach out. We're a volunteer organization. Membership is free. We would love to have, you know, more the merrier. And, you know, I'm thrilled to also announce that Ocrolus, my firm, is a proud sponsor of NYC Fintech Women. And, you know, we consider them a strong ally for us, just like we do with many other firms. So there's a lot of interest and excitement there as well. So any other final comments, ladies, that you'd like to add in our last minute?
Just thanks to Nicole. I thought, you know, you really led this and made it happen. So thank you.
Yeah, thank you.
Thank you. Thank you, Nicole, very much. And thank you to my fellow panelists and also to the audience. I call all of you here, right? Let's continue to change the space for the bettering of our customers and the bettering of our lenders and the entire space together. So it's been a pleasure.
Terrific. Thank you.
Thank you.